we are in a very interesting environment, and reminds me of the old Chinese proverb about may we live in interesting times, but it's not really a proverb, it's a curse. And I'm superstitious, and if you're an economic and financial market forecaster and you're not superstitious, you probably should be, because we need all the help we can get. So speaking of China, in the Chinese zodiac, this is the year of the wooden snake, and the wooden snake happens every 60 years. So I think that's a little apropos, because we probably have with Donald Trump 2.0, a 1 in 60 event. Other words, as you mentioned, uncertainty, unpredictability, and how you invest in this sort of world where there is so much uncertainty, and the confidence bands around any forecast are much wider than they've been, I would say, perhaps in our professional lifetime. In answer to the question about the data, I'd say that if you look at the data at the headline level, you got a U.S. economy that's growing pretty nicely. But I'm not seeing ratification in other pieces of information about the beloved U.S. economy. For example, the survey data that comes out from the Fed itself. We get the Philly Fed indices, manufacturing services. We got the New York Empire manufacturing. We just got the Kansas City Fed manufacturing and service. So we get these ongoing, timely, monthly survey data on manufacturing and services. And we have the most up-to-date numbers for January. We actually create a Z-score or a Z-score out of these surveys as corroboration for what the government data are saying, because that's what you cited before. All those numbers come from the Bureau of Labor Statistics, the Commerce Department, so on and so forth. No, the survey data are not flashing a 3% growth economy, more like 1. Now, not -1, so you can come back and say, well, it's not a recession. However, I'm pretty sure when you and I started in the business, God knows how many years ago that was, we got down to 1% on GDP growth. People would be asking, so when's the recession starting? It's what people like me and Stephen Roach in the old days would say, stall speed. So no, I'm not buying into all the government data. The Fed's beige book itself, the beige book comes out every 6 weeks. The Fed started doing the beige book in 1970. It's interesting because it's not quantitative, it's qualitative. And it's a survey that comes out every 6 weeks. The Federal Reserve sends their staff into the field and interview business contacts across the country and across all industries. We just got the beige book 2 weeks ago. How to describe the U.S. economy. Describe the U.S. economy not the way you described it or how Jay Powell described it. We actually applied data science to this, and it's not a 3% economy. The words slight, soft, slow, modest. There was no words hot, strong, robust, buoyant. You didn't find that at all. Now the word uncertainty showed up 6 times, which is rare. I don't remember in my 40 years in the business seeing such a divergence between what the government's data are spitting out and what you're seeing in the survey data, the private sector survey data, what we're seeing in the beige book, to which I would say to Jay Powell, who correctly talks about the strong U.S. economy because he's buying into the BLS data, to which I say, well, take the L out of BLS and maybe that's more appropriate. If you're not going to pay attention to your own beige book, why bother spending the time, money, and resources on it? But it's telling you a slightly different picture. I would say the economy is softer than what appears when you actually dig beneath the surface, but certainly market participants are believing in the government data. The stock market, the bond market, the credit market, they believe in the veracity of the data. I'm not going to say that there's a conspiracy theory going on. What I will say is that, and this is especially true in the post-COVID world, and you mentioned the non-farm payroll numbers, they have been revised down 75% of the time in the past year. And that's because the response rates, especially from small business, are much lower than they've been in the past. The response rates to the data that the government is getting, that they're producing back to us, the response rate is very low. Ergo, the error term in the data is very high. So I'm wondering, and this is what happened back in 2008, if you go back, the NBER, the National Bureau of Economic Research, they are the arbiter of dating when we have recessions and expansions. And when they told us that we were in recession in December 2008, well, what a big surprise that was. But most people thought the recession started in September of 2008 when Mother Merrill and AIG and of course Lehman all collapsed. But people were surprised when they they dated the recession starting December of 2007. Why is that the case? Because the NBER, look how long they waited to declare the recession, December of '08. At that point, it became pretty obvious we're in a recession. But they dated to December 2007. Why? Because they wait for all the revised data to come. It's not because they're slow and stupid. These are PhD economists. They wait for all the revised data. So guess what? Next time you and I are having this conversation, we might be talking about a different set of economic data. So color me skeptical over the quality and veracity of the government data that market participants are trading around. We have a sample size of 4 years, Trump 1.0, where he did all that. Restrained immigration, deregulation, huge corporate tax cuts, and tariffs. Now we could argue about the scale of the tariffs looks to be quite large this time around, but we have a sample size. And people said the exact same thing after he got elected in November 2016. I remember Larry Lindsay, former Fed governor, he was on CNBC right after the election talking about reflation, inflation, and talked about interest rates going to 5-6%. That never happened. Even before the deflationary detonation at the onset of COVID, all the different measures of inflation, producer inflation, import inflation, consumer inflation, and all the core measures were all at or below where the trend was when Donald Trump took office. How come people don't recognize that? And it's not as if he didn't have restrictive immigration policy and we had a 3.5% unemployment rate. And there was no massive wage acceleration. Do you remember Trump's first term as being inflationary? Because I don't. So we're just back to the old claptrap of it's going to be all about inflation from Trump's policies. We'll see what happens with immigration. Will it tighten up the labor market? It's an assumption. What if I told you right now that there are more than 5 million native-born Americans out of work and looking for a job? So no, I'm not getting sucked into the vortex that Trump's immigration policy is going to create some sort of wage spiral. Deregulation, well, we know that over time that is going to lead to a lower corporate cost curve. That's disinflationary. Corporate tax cuts. It works both ways. It stimulates aggregate demand, so you'd say, well, that's reflationary. True. But what else does it do? And that's why the corporate tax cuts in 2018 weren't inflationary, because as an employer, when your taxes go down, your margins get fattened. Therefore, you don't have to raise prices to boost your margins. The government just gave you that opportunity to widen your margins without having to raise prices to your consumers. What exactly is inflationary about that? Now, tariffs are trickier, but there's all sorts of assumptions. But remember that there's 3 players in this game of the tariff. There's the foreign exporter, there's the domestic importer, and then there's the final consumer. Who is going to bear the burden of the tariff? And everybody, when you're talking about Paul Tudor Jones and other people, well, their assumption is it's all going to be borne by the consumer, but it's uncertain. We do know that in the last go around, the consumer didn't bite. There's no perceptible impact on inflation from Trump 1.0 and the tariffs he put in. On top of that, let's assume for a second that the whole burden goes to the consumer. Are the tariffs inflationary? Then you have to talk about how do you define inflation? Inflation is a persistent rate of change. It is a process. We had pernicious inflation in the 1970s, not because of the oil embargo in 1973, but because OPEC raised the oil price each and every year. It was a wash, rinse, repeat. 7 years of repeated increases in the oil price. And over that period, they raised the oil price for an oil-dependent, foreign oil-dependent country back then, tenfold. And we talk about the 1970s. It wasn't a one-off in 1973. If all OPEC did was double the price in year one and left it there, we would not be talking about the inflation of the 1970s. But it was a recurring shock. We had 18 months of inflation in 2021, 2022. Why? The economy reopened and we had all this stimulus, but we kept on getting these rolling squeezes on supply from the supply chain shutdowns, especially in China. It was a recurring theme. So if you're going to tell me that Donald Trump is going to raise tariffs every single year to perpetuity, well then we're going to have inflation. But most of the time you raise tariffs and you do it once, and it's a one-off level price shift, and then you move on from there. So that is not inflation. Now, someone come back and say, well, but if they do the price shock from the tariff and it falls to the consumer will then bargain the employer for more wages, and you get into a price wage and wage price cycle. It's possible if the labor market is really tight. You mentioned that the unemployment rate went from 4.2 to 4.1. You can trade around that number for a day, but to me that's noise. To me what's more important is that the unemployment rate bottomed at 3.5% for the cycle, and the trend is moving up. And it's not a straight line. So more slack, and you could see it in the JOLTS data. Like you can see exactly what's happening. Even though companies are keeping their firings low, nobody wants to get rid of their labor, the hiring rate has come way down. The hiring rate is like at a decade low. And that's telling you something about the contours of the labor market. It is at the margin softening up. So I don't think you're going to be having a lot of people bargaining hard for wage increases going forward because of the tariff. That's my assumptions in my business of forecasting. Your assumptions drive your conclusions. So I would say two things on the tariffs. Unclear how much of the burden is going to fall on the consumer, but even if I'm wrong on that, tariffs have to be a persistent. He has to raise tariffs persistently for it to cause inflation. Other than that, it's a one-time level price shift. And it's no different than what we're seeing right now. What did prices do during COVID? They went up like 20 to 30%. Prices aren't coming down, but the inflation rate's coming down. Prices rarely come down in the aggregate because so much of the pricing is in the service sector. Like you might find auto prices come down, furniture prices come down, but service prices tend to be sticky, and that's most of the pricing pie. So we revere Paul Volcker, and we call him the inflation dragon slayer. He slashed inflation, but did he slash prices? Prices never went down under Volcker. He is renowned, and there's a statue of him because he took a 14% inflation rate down to 4%. It's the rate of change. That's the inflation rate. It's not the level. And inflation brings down democracies. Inflation brings down empires. It is a social disease. Inflation is a tax on the most vulnerable parts of society, the poor and the elderly. And it will ruin your re-election prospects, as we saw with Jimmy Carter and as we just saw with Joe Biden. So I would just say that if Donald Trump creates the conditions for an inflation cycle, that will seriously impair his legacy. So I always have to operate under a degree of rationality. Maybe with Donald Trump, that's a mistake. The Republicans in the House in particular, and there's a lot of fiscal conservatives there, understand how inflation is damaging for the economy, but also damaging for their own re-election prospects. So I am not buying in one iota to the inflation narrative, full stop.